Hey traders, Gabe or Apollo here. Did you know that there's a way to get premium access to all of your favorite Money Morning live traders in one place? It's called the Live Trading Alliance. This premium service gives you access to 5 members of the Money Morning live trading team in one service. You get access to roundtable sessions featuring the best short-term and long-term ideas for the market, along with a personal VIP concierge assigned to you for that white glove treatment. This is the ultimate live trading experience. Of course, your membership also gives you access to the Live Trading Alliance chat room for exclusive live trade ideas all day long. This is the only way to get our team's full trading outlook in one place. You may even have credits on your account to apply toward a membership, so call our team at 877-212-9163 to see what we can do for you today. Again, if you want to learn more about our most premium live trading experience, just call 877-212-9163. We'd love to help.
Hey guys, it's Liz. So CJ just rolled out his energy action plan and it's pretty intense. Not only is he handing out special energy trades in Night Trader, he's also bringing on a whole bunch of guests to amp up the profits every Wednesday during top secret oil sessions. Can I say oil spill? You'll want to get into Night Trader ahead of the next session, so call Gabe at the number right here. See you soon.
Money Morning Live. Now that you've heard about all of that, it's time for me to bring in Tom Gentile with Power Profit Trades with something special for you guys today. It's a once-in-a-year opportunity. You're going to hear all about it from Tom and Mike in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. This is our Operation Surge Strike edition. And I got that special guest that I warned you about yesterday. We're going to do a mini masterclass today. So we're changing everything up, all right? And you'll see what I mean in a moment. So we're going to do what we call mini masterclass. I have been talking weekly about Brutus and weekly about surge strikes, but I thought I would bring in Mr. Brutus Maximus to give you his idea and really go through from A to Z, the soup to nuts on how we attack earnings seasons, because we are so close. In fact, we're already getting started right now. So guys, grab your notebook, get yourself a cup of coffee. I got mine. And get ready for a major download of earnings trade knowledge. All right. So we're going to talk about how to use the strategy, the worst ways to trade this, the best ways to trade it, how we trade it, and much more. So ready to get started? I know I am. Eric, how you doing today?
I'm ready to get started as well. I heard about what you're doing here today, and it's a once-a-year thing, and it's kind of an exclusive thing, so it's an exciting day.
Yeah.
And I love Mike, so he's here as well. We'll be seeing him later in the show. So it's just an exciting day all around. How you doing?
And you know, and even though earnings happen 4 times a year, this is a big masterclass series that we only offer. We've always offered this to our Optionetics students and the folks that are a part of Tom's Option Tools. This is the first year that we've saved some slots for the Money Map Press community. And let me mention this too. You can't find this offer on Money Map Press anywhere. All right. It's actually direct to our group, which is Tom's Trading Room. All right. So this is our educational series. So you really, the folks that join us once a year are really working directly with Mike and myself and my team. So it's kind of a direct to us. All right. So something that Money Morning and Money Map Press decided that they were going to let their top traders get a chance to have access to, and today I'm going to tell you why today is different. Typically, what do I do here? I start talking about the news. I start talking about the benchmarks. We could talk about Pepsi's earnings, but why? We could talk about CPI, but everybody else is going to talk about that. So why even bother? I could even go through the benchmarks like the stocks, bonds, currencies, commodities. In fact, the only one on my screen that's made us a big move, and you could post it up now, Eric, is USO. USO, the oil market's down almost 7% today. Hey, we called that one. I got out of the way of that one weeks ago. All right, when we jumped up to 90 and kind of did that two-step. And I even mentioned yesterday that I thought that the season of being bullish in oil and energy may be behind us for the time being. So, I could talk about Bitcoin, but we did that yesterday. Instead, I want to talk about a rumor. So, a lot of you out here know about Brutus. Eric, we talk about Brutus all the time, don't we?
Oh, yes, we do. Brutus is like part of the family over here. Yeah, but we're
He
going to hear
is,
more
but
about Brutus today, right?
did you know Brutus actually has a family?
Well, everything comes from something, but we don't know the origins of Brutus or the,
Yeah.
all that story. So let's hear it.
I mean, those of you that are watching us on YouTube or watching us on Monday Morning Live, and you've heard me talk about Brutus, Brutus is part of a family. And I'm not talking about a family like he has a brother, a sister, a cousin, an ex-wife, a girlfriend on the side. Not that kind of family. All right. We're talking about a family of software scams. And Brutus is just one of those that we utilized for Operation Surfstrike. But we got many, many more. And it's a family of what we like to call our earnings mastery scams. So I want to hop right into our strategy session. We're going to skip all the market outlook stuff. And like I said, I want to bring on the guy, we call him Brutus Maximus. He helps refine Operation Surge Strike, and he's even taken over the channel a couple of times here on the main screen. So please welcome back Mike Wade. Mike.
Buenos días, amigo. ¿Cómo estás?
Costa Rica.
Costa Rica, baby. Pura vida.
Did you get Starlink yet?
They don't have it here yet. I'm on the waiting list, but hopefully soon. I don't know when, but I want it.
Yeah, you got to get yourself some Starlink. I have it as a backup, and let me tell you, I have used it a number of times because of the storms we've had in Florida this year. But I want to let everybody know, Mike, you and I aren't here to talk about the weather and talk about what continent we're living on. We're here to talk about how we make money using something called earnings, which comes around quite a bit, comes around 4 times a year. So we're going to do a little mini masterclass here. And so I want to get started on this. Before I do, I want to let everybody know, if you like what you hear, you might be interested because we have a few spots that we've left open for the Monday Morning Live group for something we call Earnings Mastery. It's a once a year class. It's a 5-week course. A lot of my Optionetics students and Tom's Option Tools members already signed up. I mean, they took the majority of the spots. We promised a few seats for today's session with you. Hey, listen, if you want to skip all the details, I know there's a lot of early birds out there. I'm going to post it up right now in the chat box. So there you go. That's for me. 1, 2, 3. That way you know it's me. And so there's our link if you want to check it out right now before we even get started. But because we always know there's early birds out there that want to get to the end of the book. And so I'm giving the end of the book right now. We'll get back to that in a moment. But our Earnings Mastery course, it's 5 weeks of live training with Mike and myself. 6 months of recordings, live discussion boards, upgraded scans that includes the entire Brutus family, live support too, much, much more. Here's the thing. We're doing this at an 80% off our regular price. This is only for 24 hours, folks, because tomorrow, actually a little more than 24 hours, tomorrow afternoon, we're shutting it down. We are shutting it down. Let's pull up the agenda, Eric, so I can show everybody what we're going to talk about for the next several minutes. So today's mini masterclass, we're going to talk about the wrong way to trade earnings, all right? Our Operation Surge Strike strategy, how Brutus works, and the extended Brutus family. That's the big things we want to cover here. So without any further ado, Mike, you know what? I want you to take over for the next few minutes, and I want you to talk about these things. And I want you to show everybody how we do it. So let me slide out of the way, and let's let you get to work.
All right, man. Thank you so much. Welcome, everybody. I've been trading since 1998. I quit my corporate job and I met Tom in the early 2000s and started teaching and trading with him. And there's a pattern and a catalyst that I want to talk to you about, which is the secret sauce behind Brutus. So earnings is one of the most reliable and consistent pattern generating market catalysts. So in trading, we're looking for historic patterns that tend to repeat. And earnings is a major catalyst. And we are currently in the midst of a very volatile earnings season. We just had two that were very volatile. This one's volatile. We have the Fed, we have interest rate hikes, we have inflation, we have oil. All those things are creating a lot of volatility in the market. And I have to say this, that the timing, maybe our timing is impeccable, but your timing is impeccable to be right here, right now. So let's talk a little bit about what earnings do. What do earnings announcements do to stocks? Some stocks, what you'll find is that these things called gaps happen. And if you look at this chart, this is an old chart on Abercrombie and Fitch. These green E triangles here, 1, 2, 3, 4, are earnings announcements. And what you can see very clearly in the chart is on earnings for this particular stock, the stock gaps. The stock gaps and the stock gaps. So what do you think is going to happen the next earnings season? Well, that pattern is quite consistent. And so, one thing you can do is plan on the stock gapping. Here's a recent one on Netflix, and you can see this chart was taken last week, but you can see two earnings periods again and gaps and gaps. So what most people do with these, and the wrong way to do it, let me back up a little bit. So a lot of option traders will come in right on the earnings date and anticipate a gap. All right, so what they'll do is they'll either buy a put in case the stock, if they believe the stock's going to drop, they'll buy a put. If they believe the stock's going to rise or gap up, they buy a call. The truth is, though, stocks gap in both directions. So the people that are maybe trading it a little bit better than picking direction are those that would trade straddles. So let me give you an example of one. This is the wrong way to trade straddles and the most popular way, quite frankly. So here's a company. We did a surge strike on this, but we did it the right way. This is not the way we did it in surge strike. We actually did okay on this one. So look here. So here's the deal. AVAV, Aero Environment, had earnings on this particular day right here. This is earnings. So the wrong way to trade this is to buy a call in case the stock gaps up, and then buy a put in case the stock gaps down. That looks complicated, but really all it is playing both sides of the fence, straddling the fence. In fact, it's called a straddle, and it produces this beautiful risk graph here where you can see if the stock gaps up, we make money. If the stock gaps down, we make money. That's true, except there's a bit of an issue that most traders don't even think about, and it's called implied volatility. All right, so when we say surge, what we're referring to is a surge in this thing here called implied volatility. I'm going to talk more about this in a minute, but this is essentially the expense of the options. All right, so Tom, I like your analogy about the Super Bowl. Let's say the Super Bowl is the earnings announcement, it's the event. All right, that's the event. And people will scalp Super Bowl tickets right into the kickoff, and then immediately after the game starts, the ball is kicked, the prices of these scalped, high inflated price Super Bowl tickets will tank immediately after the earnings. So that's in play here in options trading. Let me show you what would happen. Had you bought a call and a put here, you'd spend about $1,225. Don't worry, we're going to show you straddles that are less than $500. Don't worry too much about straddles just yet. But let's just follow the concept. And so here's what happened the next day. And by the way, I'm in Tom's tools. I'm using the historic back testing features, which we teach in the course. And look here, I'm going to go forward one day to the day after earnings, and look what happened. The stock did in fact gap. It gapped down and then bounced up here. It gapped down, and this trade would have lost 32% in a heartbeat overnight, a 32% loss. So the stock did gap. But notice here, let me back this up a second and tune your eyes to one thing. On this risk graph, I didn't even cover this. Let me cover this. So here we have our break-even line. If the stock rises, the red line is showing us our profit for today. So here's all the profit to the right. Here's the risk to the left. If the stock closes here at expiration, we lose. All right. Now, these colored lines are also reflecting implied volatility. So notice here, I'll duplicate this and take you back and forth. And I'm getting a little detail here, and I know I am, but it's important, and it's the heart of what this is all about. All right, so look here. That's before. Look at our IV, and this is after. Look at our IV. Boom! The IV comes whooshing out of the trade, sucking the lines into loss. That is the wrong way to do straddles. Sometimes you get lucky and the stock gaps all the way down here, maybe to 60, and you make $1,000. But man, unless the stock gaps really hard and really far, you're not going to make money with straddles consistently this way. But wait, is there a better way? Yes, it has to do with really understanding the power of implied volatility. We call it IV, we call it surge. IV surge. The few who understand it profit from it. I've been trading for a quarter century now. Believe it or not, I had hair back then. A quarter century of trading, and I've never, ever seen anybody really harness the power of implied volatility. This, ladies and gentlemen, is the most beautiful and consistent pattern in trading. It is called implied volatility. It moves. Options get more expensive. Options get less expensive based on demand. So another way to think of this is a demand curve. Another way to think of this is an expense curve. So look, earnings. What happens to implied volatility into the earnings announcement? It rises, heartbeat, bump, 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 bump. Consistency. You see 4 or 10 or 20 of these in a row, you can pretty much count on it happening again. This, in my view, is the most consistent pattern in trading. Let's figure out a way to make money with it. Now, when I first started trading, I was like, man, I know that's a cool pattern, but how do I make money on it? I certainly don't want to hold over earnings, but what can I do here on the front side of this curve and catch the IV, have my options get more expensive, and get out before the announcement? So here's the deal. Here's the pattern. This is surge. This is the secret sauce of Brutus, Operation Surge Strike. It is a wonderful pattern recognizer. Look here, Amazon, same thing. SanDisk, same thing. I could put up hundreds of charts and you'll see that. Now, not every single stock does it. So we need a way to find these patterns, go through every single stock that has options and scan for these patterns. So we have a scanner for that. That's what Tom's all about. We've been working on scanners together for quite a long time. But Tom's scanners actually go out and detect these IV surge patterns and turn them into very large profits, as you'll see in a minute. And so these scanners are really brute force. That's where Brutus comes from. Brute force, finding the exact optimal entry day to maximize our profits. And we use historical accuracy. We only take trades where they have worked 100% of the time in the past. Is massive, beautiful stuff. So here's, I coined the phrase surfing the red wave. And just to illustrate, what we want to do is hop in on the wave sometime before the wave starts, during the wave, actually after the wave starts, and then get out before the earnings announcement. In sometime before the earnings announcement, out before the earnings announcement. Sometimes we'll get in later and we'll catch the wave as it rises, as it's already risen. And then we get out before the earnings announcement. In before, out before. That is our secret sauce. Nobody does straddles this way. I've never seen anybody do them this way. So that's what we're up to. We want to surf that red wave. So let's do a case study. And I want to show you, I've got a handful of trades. We don't have a lot of time. We have a course where I talk literally for hours. So I'm watching the clock as I tend to go long. I just love this stuff. It's the most sexy and elegant thing in trading in my estimation. So here's New Corp. This is a trade we just did. Earnings, earnings, IV rushing into earnings. Here, IV rushes a lot into earnings. So there's our heartbeat pattern. And what happened historically with Nucor is that it would rise into earnings or drop into earnings. So we don't know which way it's going to go. So what do? Well, we buy a straddle. All right, I just showed you one, but I'm not going to do it the wrong way. I'm going to do it the right way. The scanner goes out and crunches all the data and finds the exact optimal entry days to enter before the earnings announcement. And let's just go through this quickly. So this data here shows me everything I need to know. 100% of the time over the last two earnings periods, entering 15 days before. That's our optimal entry day, not 14, not 16, not 1, not 23, 15. Maximum profit, historically speaking, is 15 days before the announcement. Historically, that did generate 99.44% return on investment. All right, is that some good data? The other thing that I haven't mentioned yet is it also shows us the IV surge, the 15 days before earnings over the last two earnings periods. 163% in 15 days, massive. That's this. Boom. That's what we want. Yes, please. Thank you, sir. May I have another? So what do you think is going to happen the next earnings period? Well, we can reasonably count on this happening at the next earnings period. The software also tells you exactly when to get in, exactly when to get out. All you got to do is take the trade and let history do what it does. So let's do an example here on Nucor. And this was a trade that we did this last quarter. And what we did was, again, 15 days before the earnings announcement, we bought a call and we bought a put. And that created this straddle here. So there we go. Same risk graph I showed you before. Stock rises. The red line is the today line. The stock rises. We make money. Stock drops. We make money. The other thing is the implied volatility had not yet started to rise. So we timed our entry according to history, and it gave us, as you'll see in a minute, a really nice entry point. All right, now let's go to the earnings date, which in this case was 4/21 before market open. BMO means before market open. So what does that mean? That means on the 21st, before the market opens, earnings is released. The market opens and the stock's gone somewhere. So we need to get out the day before. So we get out, the software told us this anyway, we get out the day before the 21st. So the 4/20 was our exit. Let me show you what happened. Let's go to 4/20. 60% profit on this trade. The stock did in fact rise. We made some money on the stock moving. And here you go, everybody. Look at this. The IV was here when we started, and we got this massive IV rush contributing profits. A 1-2 punch to profits. Stock rose, we made money on that. The IV rushed in, we made money on that too. 1-2 punch to profits. It's pretty phenomenal. My mouth actually starts watering when I talk about this stuff. All right, now, it is possible that we find stocks that move consistently in one direction into the earnings announcement. And if that happens, then we, instead of playing it safe and buying a straddle and making money both ways, we pick a direction. We pick a direction based on what history did. Here's an example on PayPal. Look at this IV chart. Earnings, IV rush, earnings, IV rush. So that's good. We want that. The software found it. The other thing that the software found us, the scanners found us, is that the stock drops 20 days into earnings over the last two earnings periods. So we've got a directional bias on PayPal based on what it has done historically. The software told us I didn't have to go through stock by stock. I ran a scan and pushed a button, and then Brutus came back and said, hey, look, 100% of the time over the last two earnings periods, had you bought a put on PayPal, you would have made 264% return in 20 days. Are you serious? 20 days before the announcement, we enter on 4/7, we get out on 4/27. That's 20 days. You make 264% in 20 days. It's the truth. It's what's happened. That's historically what's happened. So what do you think is going to happen at the next earnings period? Well, we were counting on it happening again. History repeats, except when it doesn't, but we can handle that too. So we're going to enter on 4/7. We get out on 4/27. And again, look at our IV rush here, 195.29%. Beautiful, beautiful, beautiful. All right, so let me show you this trade real quick here. All right, so we ended up buying just a put. We bought a put because PayPal had historically dropped into earnings. All right, so on April the 7th, we bought an April 29, 110 put for $5.90. Times 100 is $590 worth of debit. That's what it costs. That's your max risk as well. So now the risk graph is slanted towards the downside. This is a put risk graph. And as the stock drops, we make money. And really, the stock could drop to zero. Not going to do it, but there's really unlimited profit all the way down to zero. So if history repeats, the stock will drop. IV, which is currently here, will rise, and we have a good shot at making a 250% profit if history repeats. Let me show you what happened. You're probably wondering. I'm going to duplicate this and show you the before and the after. Actually, I couldn't do that. Let me go ahead and go to 4/21, which was the day we exited. This happened to be before earnings. And why did we get out before earnings? Well, we hit our profit target well before earnings. So we hit our 250% profit plus as the stock tanked. It continued to tank, but well before earnings, the stock dropped hard, and we ended up with a beautiful 250% profit on this one. And again, the IV did in fact rush, contributing to profits. I could go on. Let's do one more. Here's one on Roku. Same story. Let me show you the slides real quick here. Here's Roku. Similarly, it dropped into earnings. Now, listen to this. This is pretty amazing. Sometimes the scanner says, get in one day before earnings. What? Yeah. Sometimes patterns exist one day into earnings. Earnings is there. Stock drops one day into earnings, accompanied by IV rush one day into earnings. So here's a trade we placed. The software told me everything I needed to know, as I've shown you before. 100% of the time over the last two earnings periods, entering 2 days. We actually got out the day after. This was a one-day trade for us. 82% return on investment, and a very nice with this 2 day technically, 2 days 75% IV rush in 2 days is exceptional. So that's the trade that the software told us. The software, by the way, tells you exactly which option to buy, exactly which strike price. You don't have to go hunting through option chains. Notice here, earnings is on 4/28. We got in on 4/26. Good. We're going to be out no later than 4/28. Now, let me show you this thing. This is really cool here. The options expire 1 day after earnings. 1 day after earnings, these options expire. So we're going to trade a 3-day option. There's reasons for that. I'll share those in the course, but we're going to use a 3-day option to potentially profit in this trade. Let me take you forward one more day here. So the next day, we had a 50% profit target on this one. And the next day, boom, 59% return on investment. History did, in fact, repeat. Stock drops, big profit, massive. Oh my gosh. Let me take you back to the prior day. The IV rush in 1 day. This is what I really want to show you. This is why I have this example. I've got plenty of them, by the way, but this is one I wanted to show you. Look, the IV was right around 251. And then the next day, all the way up, what is that? Well, you can see it right here. The IV rush from 251 to 328 in a day, in a day, in a day, in a day. The power of IV rush is crazy. Okay. Now, I wanted to show you this. What's really great about right now is the volatility that's been present over the last two earnings periods for all the reasons you know. Interest rate hikes, inflation, wars, all that stuff. So this was a run that we had. We had a 17 trade win streak last quarter during a volatile earnings season. So we had 17 trades. 100% of them were winners. 17-day win streak is 17 trade win streak is unheard of in trading. And we ended up with 100% wins. The average gain was $400. We made $8,000, by the way, on 17 trades. 481 average gain. 0 losses, of course. Our average trade length was only 9 days. Here's the other part of surge. Most of our trades are averaging 7-10 days, somewhere in that time frame. We're in, we're out. We get in right before earnings and we get out. Sometimes it's 1 day, sometimes it's 20 days. But the average is about 10. And our average profit per trade percentage was 39.81%. Now, I don't know if you've been trading very long. I have, Tom has, many of you have, but that is a phenomenal result. And all of this was achieved using the power of surge. Now, this is just a snippet of all the trades I'm looking at. I'd have to do about 10 of these slides to show you all the trades we're looking at. One is on T. Rowe Price, Boeing, Logitech, Zion. All of these, look at these returns here: 309%, 259, 156, 144, 277. I mean, I'll read it, but you don't need me to do that. 100% winners over the last two earnings periods. All right, so these are the trades that I'm looking at for Surge Strike. These are the trades we'll talk about in the course, and this is just a snippet. There's many, many more of these to cover. Okay, Tom, that was fast, but I before we go to questions here, I thought what we could do here is give everybody a little present, like an actual trade that Brutus found for us just this morning. And it's on Logitech. So what Logitech does is that it drops into the earnings period over the last two earnings periods. 100% of the time, Logitech has produced winners, an average return on investment of 156%. 156% for a 13-day trade with a nice 58.62% IV rush. That is amazing. What do you think is going to happen next earnings? Well, history repeats, except when it doesn't. Good chance, especially in a bearish market. This is a good looking setup. Enter on 712, exit on 725. Isn't today 712? Yeah. And we want to exit by close of market on 725. Usually around 3 p.m. is a good time to do that. The next earnings date is confirmed right here. So that's our trade plan. Here's the actual trade. Now I'm going to quickly, I don't have Thinkorswim up. I was going to check the pricing, but that's a good price as of about 30 minutes ago. So our entry date is today. The gift that we're giving you is to paper trade. Practice this stuff. Practice it. Buy to open. The Logi, that's the symbol, August 19, 55 put for a limit price of $4. All right. Now, the exit date is on July 25th. And so what you want to do, you bought this put to open on July 25th. Before the market closes, you want to sell to close the same put at market price during the last hour of the trading day. That IV rushes into earnings all the way up to 4 o'clock on the 25th in this case. So usually what I do is I'll get out of these trades around 3 p.m. just to make sure you're out of the trade. But be sure, it's so critical that you not hold over the earnings announcement. The stock could gap up and you'll get IV crush for sure. So Tom, IV is a thing that hurts a lot of option traders who don't know what it is. And what we're doing here is offering something that very few traders even understand.
And let me do this real quick. So Eric, if you could throw my screen up. So what I did was I brought up the Street Smart Central website. This is part of Charles Schwab, and I just put in the Logi, the put, so that everybody can see that the 55 puts for August 19th, they're 360 by 380 right now. So that's a pretty decent, I'd call that a pretty decent spread. 20-cent spread. Could you get this in the middle at 370? Maybe. Could you get it for 375? Probably. All right, so that's what that's going for right now as we're talking. And so, one of the questions, we get questions like this all the time, Mike. And by the way, the big question, will this be emailed to us? No, it won't be. This is just for the live community here right now. And we're not putting this in as a surge strike recommendation. In fact, we actually put a surge strike recommendation out not too long ago. So that's gonna, that's the one that was emailed and text message to our surge strike community. But we're showing you how we set these up, how we find them, how we set them up. Another thing when it comes to these puts, what's the exit plan here, Mike?
Well, the exit plan is really straightforward. We get out right before the earnings announcement on the 25th. That's really comes down to that. Now, stop losses are also important. Typically, we do have reports coming out this week that could be deemed as positive, the CPI, the PPI, retail sales. So we could get a pop-up. But in the event that does happen, which is a possibility, you want to think about taking a 50% stop loss. So if you hit 50% 50% loss, pull the trade and move on to the next. Other than that, take it to the earnings announcement.
Right. But if somebody wanted to, say to themselves, well, you know what, I'll do 100% profit with a 50% stop loss. Is that something that's doable?
Yeah, absolutely. In fact, the scanner shows an 82% historic return on investment. The last earnings period, though, was 132%. So I like a double on this.
Right.
Let's get out of the
double. So I'm going to show everybody something you can do. And again, this is completely up to you, folks. I want to show you something that I do, which is really sets these things up. So let's say I'm interested in this Logitech trade, and I want to put this on, and I've got, and I'm going to do the minimum number of contracts. So I just want to do one to start. Let's say I want to do this for $3.80. So I've got this set up, but well, you know what? Let's just let me punch it up to 4. All right. Cause I want to use 4. I'd rather get it at 380, but I want to use 4 because it makes it's just easy for me to show this in an educational environment. So this is a particular type of trade that Street Smart Central does. I'm sure that Thinkorswim has their own version, and there are some other brokers that allow you to do these kind of things too. This is called an all-in-one trade ticket. So what we're doing is we're gonna put the whole trade in, the entry, the exit if we're right, and the exit if we're wrong, all in one shot. And so you only have to do it one time. So if I'm buying to open one of the 55 puts, I want to do this for 4 or better. If I get filled, okay, I want to do something called a 1 triggers 2. So a 1 triggers 2 order means that once the open is filled, I want one of the following of these to happen. I want to sell to close that 55 put. Let's say I want to double my money. So in order to do that, I'd have to do a limit order of 8, and I'll make that a good till canceled. And then this is what if I'm right? And then order 3 is going to be what if I'm wrong? And if I'm wrong, I'm going to sell to close this at half that price, which is of half of 4 is 2. All right, so that's the 50% stop loss. This is just an example of what you can do to checkmate the market. And so checkmating the market means, let's just go through this one more time. I have my entry. It is a limit order to buy the 55 put at $4 or better. And then that's a day only order, which means if this doesn't get filled, then nothing else happens. It's canceled at the end of the day, and then I don't have to worry about it. I look for something else tomorrow. But if it's filled, immediately these two orders come into play. All right. Sell to close at 8 or better, or sell to close at $2 on a stop. Now I'm going to make this one a good till canceled also. But what we've done is we've done it's called a one triggers two. The order you place to open immediately triggers two potential orders. Now, one of those two orders is going to get filled. All right. If you're in the trade, one of these two exit orders will get filled. Now, these are, again, order 2 is triggered by order 1, and order 3 is also triggered by order 1. Remember, order 1 is the original entry. Once the entry goes in, these two happen. Now, what ends up happening after this? So either order 2 is going to fill or order 3 is going to fill, but they're both not going to fill. Whichever one fills first, the other one is immediately canceled. So let's say Logitech does what we want it to do, and history repeats itself, and Logitech goes down and the puts go up. And the puts go up in value, and all of a sudden our $4 investment becomes a $8 investment. All of a sudden now immediately this one gets filled, and the stop order gets canceled. And so then what if the other idea is, what if we're wrong? What if Logitech goes sideways or Logitech goes up and the puts go down? Then this stop order could be hit. If we get to 2, the stop order gets hit. It then closes the trade as a loss, as a stop loss, and the profit side is canceled. So so this is the set it and forget it, like Dolphin B is saying. All we're doing is, once the order's opened, we've immediately triggered exit orders on the profit side and the loss side, and whichever one happens first, the other is canceled. It's a very, very clean way of putting the order in, right? It's called an all-in-one trade ticket. I can tell you this is something that's done on Street Smart Central. I don't know if or how they're done on other brokerage sites. If you have Street Smart Central, then you should know how to do this. If you don't, then check and see if your broker offers something similar to this and translate it in. And the last thing I'll mention is, I don't care who you use as a broker, okay? That's up to you, right? I'm just showing you one of the brokerage firms that I use and why I use this one, because this particular one has some really interesting setups. So when I look through the questions, are we going to get a small account trades? Well, we try to do a lot of times, and this is a good example. I mean, this is a $375 trade right down the middle right now. That's, we've seen them smaller, but that's, if you're getting under $500, that's fantastic. That's typically what we're shooting for. With straddles, it's gonna be double that in most cases, because it's a call and a put. But we have had straddles that have gone off for less than $500. That means the call and the put combined were less than $5. Okay. Mike, do you know if there's a one triggers 2 in Thinkorswim, or do you got to do a little more work?
Yeah, it's there too. Yeah, you got one triggers OCO, which is what you just did. One triggers 2, one trigger. There's a lot. There's a whole lot of different ways.
Cool. And this is the kind of stuff. This is the kind of stuff that we teach, and we're going to be. And so we're back up again at 1:00 today with our Operations Search Strike members. So we're going to talk. We do a little bit of this in the Operations Search Strike room, but we do this. This is something that we teach. It's kind of like give you a fish, you eat for a day, teach you how to fish, and you eat for life. And that's what our earnings mastery course is all about. So this is a 5-week course that we do, folks. We go through, and let me go ahead and tell everyone what this is and how they can get it, because that's a question we get quite a bit. And that is, how do we join you through the earnings season? And so this is what we do, folks. So once a year, we put this on. This is our Earnings Mastery series with myself and Mike Wade. Right? It's a limited time offer, and for the Money Map community, it really is limited time offer. It's a little more than 24 hours, and then we're shutting it down because we start it tomorrow night. That's why we're shutting it down. I mean, it's absolutely, we start this course tomorrow night, and we're going to go for 5 consecutive weeks. In fact, actually, we're going to add a bonus week on, and we're actually going to go for 6 weeks. So we've made this a 6-week course where we're just going to make sure we get through the sweet spot, all the way through the sweet spot of earnings. And so Mike, let's talk a little bit about the curriculum. So I've got the first 3 weeks of the curriculum up right now. And so would you like to just kind of muscle through this and let everyone know what it is
Yeah.
that we'll be doing?
Oh, sure. Absolutely. So week one, we're going to get into the inner workings of options, IV, time value, things like that, and begin to introduce straddles. Eventually, we're going to be spotting optimal. Week two, we get into the scanner. We actually teach you how to run the scanner. We start to distinguish the Greeks, delta, gamma, vega, theta, particularly vega and theta.
So Mike, stop right there for a second. So on week one, we're really going through, and these classes we do are a minimum of 90 minutes. And I know you, Mike, you like to ramble on for a while. I've seen you do marathon sessions, and the thing is that we go through the class until every question is answered, live question. Every live question's answered. And then, a lot of folks say, well, I mean, what happens if I don't remember the questions until after we're done? I'll get to that in a moment. But week one is really the foundationals. It's really a very in-depth. We don't, like we said, we did a little mini masterclass here for you guys now. But this is a whole in-depth on looking for these pattern trades, the inner workings of options, and how, because this is a volatility, it really is a volatility or Vega sensitive trading pattern. And so we show you what we find, what we call IV surge patterns, and again, how to find stocks, because, there's 4,000 optional stocks out there. We're not looking for all 4,000 of them to produce patterns. In fact, I would venture to say that about 1%, less than 1% a quarter, produce patterns that are worth us looking at. I saw some stuff going on the message board, Mike, and I want to address it right now. And there were a couple folks saying, "Hey, wait a minute! It says 2-0, 2-0. You're only going back and looking at 2 earnings." And the answer is no. What we do, folks, is it's very similar to tryouts at the NFL or the MLB. When folks come on for a tryout, maybe a walk-on tryouts, we're scouting. We're scouting these best possible players. But then we grab a group of players, and then we look at them again, and we eliminate even more. So, it's kind of like going through, tryouts and exhibition before the season really starts. We do the same thing with earnings. What we do is we grab that first, we call it a first pass. A first pass look, that's where we're looking at 4 or more minimum of 1 year back test and 1 year testing on these trades. Then what we do is we go through a second pass where we look at which ones are actually generating better return on investment in the last couple of earnings cycles. So we're looking for that, that pattern that just gets better and better. And so that's where we reduce it down. So we reduce it down to what we see and what we feel like is the cream of the crop. Yeah, Steeler said it's like the American Idol show. You go through, you get the golden ticket, and then, we end up getting rid of half the golden tickets after like the first or second show. So that's a great analogy too. But we really start to get into the software on week 2. So Mike, continue with straddles on week 3.
Yeah, the straddles are they offer less directional risk. So if we find stocks that either move up or down, or we sense that the market volatility is too high to buy a put or a call, then we'll do straddles. And straddles will make a little bit less money on return on investment, but they offer you a lot more peace of mind in that if the stock goes anywhere with a straddle, you make money. So it's important that you understand how those work. It's important that you can run the scanner to find them and understand things like the Vega and Theta, the Greeks, to help us determine whether or not historically the trade looks good, and then whether we're going to take it into the future. So here's the other thing, we don't take every single trade. We do a little bit of analysis on top of it just to maximize the chances of history repeating into the future, of course. And then yeah, go ahead, Tom.
You're absolutely right. Yeah. And then you just, we roll into week 4. We talk about how we optimize these trades, and that's using optimal days. We have optimal call, we have optimal put, which is really Brutus. Brutus, we have Brutus, and Brutus is a code name for our optimal call put series, which a lot of you that have Operation Surge Strike, if you have the lifetime membership, we gave you access to the optimal call put scan, which is available on the iPhone app or the earnings app. But I can't wait to show everybody the family, and we'll get to the family in a moment. But week 5 is really our earnings action plan. We're going to add a bonus session in there where we just go through all weeks 1 through weeks 5 and look for any additional trades that might be happening. We're doing live trading as we, and finding these setups every single week as we're doing this. And again, guys, this is going to be a 6-week course that actually starts tomorrow. All right. There is a link that's pinned at the very top of the chat box if you want to see that, and also at the very top of our video here. But let's talk about the family. So here's the Brutus family. The one the one that says optimal call put, that is literally Brutus. But look above it. We've got surf the red wave. We got surf the black wave. We got optimal straddle. We got breakout straddle. We've got some family here of Brutus. And Mike, you want to spend maybe 30 seconds or a minute talking about what each of these scans do?
I'll try. So I don't know if I did anything for 30 seconds. All right. So Surf the Red Wave is a pattern recognizer that goes over historic earnings patterns and looks for the best short-term IV rushes. We can also do longer term. We don't really get into Surf the Black Wave too much, but I'll talk about it. So basically the first 2 buttons look for IV patterns. Optimal call put is looking for stocks that move directionally consistently. And we can make more money on optimal call puts than straddles in the event the stock actually moves. So we do those sparingly. Optimal straddles, I've shown you a couple of examples of that. Optimal straddles is getting in with a straddle right at the right time. And then breakout straddles, I spent the first few minutes talking about the wrong way to trade. And breakouts, when you find them that survive IV crush, they can be really big winners. So we're going to spend a bit of time on how to trade the actual gap. There's a lot more money to be made there in the event the stock actually gaps, but we need to know, do those straddles historically survive IV crush? So we do them only sparingly, Tom, but when they're there, they're pretty awesome.
Yeah, who in the room in here that's watching us right now? How many of you in here trade straddles, regardless of whether you're using, Operation Surge Strike or not? Who in here trade straddles as part of their criteria? Because there is, again, a right way and a wrong way. We have a couple of right ways to trade straddles, but the absolute wrong way is buying these things right ahead of earnings and looking for a big jump where the call is going to outpace the put or the put's going to outpace the call. Each of these scans are based on the foundations that we're going to teach you in earnings mastery, and then it's just a matter of point and click because you understand the terminology behind it. Now, for those of you that join us and you're with us, you're going to be in a situation where you're not even going to remember what questions you want to ask live. And after the class is over, you're going to say, "Oh, I wanted to ask Mike and Tom this." Well, that's where we have our forum access, and you can talk directly to our team. And it's not just Mike and I. We've got our programmers that are involved in this. They're there to help. Our QA guy is there to help. And also, we've got some really seasoned Optionetics members, Tom's Trading Room members who come back time and time again. And by the way, we don't offer this for free to the Optionetics community or the Tom's Trading Room community. They come back and they pay for it time and time again because you know why? Because they say it's worth it. And so to give you a couple of ideas, these are just a very, very small few of some of the graduates and what they've said. This is my beauty rest strategy. I can sleep no matter what the market's doing, right? That's one. Another advantage of the strategy is it not require one to be in front of the computer daily, and you can set automatic exits based on your profit targets. I just showed everybody exactly how to enter the entries and the exits. I found this one at the bottom. Actually quite funny. Can we get the SEC to require earnings every 2 months? More excellent opportunities. I wish. Let's round it out with 2 more. Straddles are traditionally thought of as expensive since purchasing calls and puts, but these strategies can be traded easily with account sizes less than $20,000 hypothetical account, even less than 10K, because the scanner selects only the best possible candidates based on history. Great scanner. And really now, and what this person's talking about is the scanner called Earnings Mastery, which opens up that Brutus family. All right. And then finally here, if I can have a system in the long run that wins 2 out of 3 trades and have my winners outpace my losers by 3 to 1, then there's no other strategy that I would rather be doing. Right. And one of the questions I am getting, as I look at this is, again, what does this all encompass? And again, all encompass is this. We got 5 weeks. We're changing that to 6 weeks of earnings mastery with myself and Mike. The earnings mastery trades, this is supposed to be 5 weeks of earnings mastery trades with optimal entry exit dates. We're upgrading the software so that you get all of the mastery scans. So those of you that have software with us, that's included. We're going to comp your software through the class for those of you that are brand new. And afterwards, the software is, it's $79 a month. It's, and it includes all the scans. So it's very, very nominal afterwards. All right. But limited time offer. We've had these classes priced for years at $4,990. And so limited time only, what we did was we offered this to our Optionetics community just a couple days ago. We offered this to, in our Tom's Option Tools community, because we did a special, we do this every year for our own educational group, the folks that are part of Tom's Trading Room. And so this year, what we're doing is we're offering it to the Money Morning community, Money Morning Live community. And we decided we're going to offer it for the same price, which is really what we call our partners pricing. And our partner pricing is 80% off. And realize that you're dealing with, with this particular class, you're dealing with direct to us. All right. So we will send you you'll go direct with us for the live classes. We will send you the recordings, and the recordings go out. The recordings have been going out about an hour to 2 hours after the live event. We do these things at 8 p.m., guys. This is, we don't want to do them while the market's open. We want to do them after the market's closed so we can all have a level head and learn and not have the ticker running beside us. So we try to eliminate as much distraction as possible while talking about setups for the next day, next couple weeks. Again, it's a 80% off special. Again, includes the upgraded software, Earnings Master Traders Forum, live support. There's just so much of it that we do for you. If you want to sign up, then you've got that link that has been offered to you many times, and I believe it's at the very top of our window here. It starts off with bit.ly. It's a bit.ly link, and offer ends tomorrow at 5 p.m. Now, here's the difference. If you want to sign up for this, Tom's Trading Room, we go through PayPal. So either you have a PayPal account or you don't. If you have a PayPal account, it's very easy. You log in, and then you'll see the discounted price. If you don't, right below the login, it says pay with debit or credit card. You would go in, enter your information in the debit credit card. You'll also see the special price that we are offering. Okay? That's from me to you guys. Thank you all very much for hanging out with us, and hope to see you as part of our Earnings Mastery membership. I'll be back tomorrow, same time, and we'll be discussing, again, momentum trading. For those of you who are part of Operation Surge Strike, we'll see you in a half an hour. Thanks, Mike. Thanks, everybody else. See you soon.